Now, a lot of people are naive to the stock market, which is where I would go with the housing, something tangible.
Mm.
Some people might believe that they want to own physical gold, but if you have enough money and you want to set yourself up with something that's known to increase in value over time, I think housing is the way to go, like buying property. Primarily because with real estate, at least over even through inflation, because it rides the wave of inflation. Because inflation is in cycles and
Mm-hmm.
throughout the course of time. And you realize that maybe 10, 15, 20 years down the line, your property value is going to appreciate. There's also something to consider as cash flow. So you can always use your property as rental income, where you get a tenant, make some money, and that continues to provide you with extra cash. For me, I think it's a no-brainer for the most part. But if you had to make a choice and you have the money, I would say a more, don't want to use the word secure, or I would say a more stable income or stable bet is to go with real estate.
You're not wrong. It does have
I'm
a
not wrong.
growth.
So what?
Can you just shut up? The growth of houses is so slow compared to stocks. And I think one of the things that it's what's safe about houses is that it's tangible. And people like to see their growth.
Mm-hmm.
People like to physically see their investment. But if you look at from a histogram, 30-year histogram, stocks have always outperformed the real estate industry. Always, hands down.
I
You're
feel like
looking
this is
at
like a
a
deja vu argument where we've had this conversation before, and
You're
we're
right.
now we're in opposing sides
But
of the
what did I
argument.
but what did I just say?
Yeah.
Our audience, they're idiots, and so we have to.
What did you just
I'm
say?
just joking. I'm
Oh,
joking.
jeez, man.
Sometimes you need to say things multiple times,
Yep.
and sometimes you got to look at it in different ways. And so you're 100% right. We've had this conversation. I tell this to my friends all the time, but are they actually investing in stocks yet? No.
Mm.
And so I think it's always important that the question and the topic is always discussed, because there's not enough of us, at least with respect to like people that didn't come from money or didn't come from financial aptitude. They're leveraging that side of investments. So I think liquidity is super important, and a lot of people don't realize that stocks are so much more liquid than a house. A lot of people are used to, so for an analogy is, typically what people do is they'll buy a house, and then after they have a 90-day closing, and then once they secure the new place, then they'll put their house on the market, the one that they own, to get the money to buy the other place.
Mm-hmm.
But that's a stressful thing. Stocks, you don't got to do that. Stocks, you can have your money, and when you want it, it depends on how much money you have. So it may take time for them to sell your positions, but then you don't have to worry about if and that. It's more about when, because your
So,
money is more liquid.
so
So
question
less
for you then.
risk.
Okay, sorry. Go ahead.
Less risk,
Yeah.
but I think at the end of the day, the barrier to entry, and I think I'll take that. The barrier to entry to stocks is probably a little higher, but with the advancement of fractional stocks, that definitely changes the game. But a lot of people don't really know what fractional stocks are, or buying a fraction of a stock in a sense.
Yeah, I think Simple has it now where it's like you can either buy the actual stock share number or you can pay for the dollar value of how much you want to invest in the stock, which is fractional, is what you're referring to. The question for you
And
though.
options as well, but that's
Yes,
another topic.
that's a different topic.
Yeah.
Question for you though. So I have $100,000 hypothetically.
That's it?
Hypothetically. And I'm looking to invest in something. So there's the option of
Well, give
purchasing.
it to me.
And I don't, no, I'm not investing you for 100 grand. No.
Wow, this guy.
But
Ridiculous.
I have the option. I don't have a house. Like I don't own a home. And I'm looking to invest that $100,000. There's a property, 3 bedroom, 3 washroom, fully detached for 700. And there's the option for stocks. So what would you advise someone who's just getting into the game of trying to invest that money? Which route would you have them take?
I think it would be a couple of questions you would want to ask yourself. is this 100,000 that is your nest egg? Is this 100,000 that is on top of extra?
No, they're using it to build they want to use it to build their income. So it's like, I have this $100,000. I don't want it to sit there. I want it to yield something for me, say in the next 10, 15, 20 years.
Okay, so there you go. So that's a long-term thing,
Mm-hmm.
right? A lot of times people would be a 3 to 5 year. That's a short term.
Yeah.
So you're talking about long term. So for me, I would think the long game would be more of a stock play.
That's interesting.
And the reason being is because you put it into stocks, given how our current bullish market's been for the last 20 something years, and you're getting an average return on stocks around 20%, then if you really want your money to grow, then you would do that. You would put it into the stock market, take the 100, diversify among blue chip stocks and diversify among, gold and
20% over 10 years or 20% over how long?
on average stocks
Mhm.
go up by 20%
Over
per
how
year.
many years?
per year.
Per year.
Yeah.
Okay.
Yeah, on average. Again, there's obviously there's variance
Of
depending on the market and depending on political situations, but that also is housing market and real estate's dictated by that as well.
So let's just say 20% over 10 years. So you're looking at about 300 and something grand, give or take, from that 100 grand.
In a sense, but like
Okay.
I said, it's varying. It's very varying, but
Mhm.
overall, you would make more off of that 100,000 in the stock market than you would in a house, hands down.
Okay, so let's do the
But
math
this
on
is the
that.
trick. This
Yeah.
is the thing. The house, because it's tangible, it seems and it feels more real as opposed to your 100,000 just going into the ether.
Yeah.
It's just going into Microsoft. It's going into Apple. It's going into all these things. So that's the trick. But go on.
Yeah, I was gonna say, because I'm just looking at it from this perspective with that 100 grand over, let's just say even over 10 years, that house appreciates 10%, right? And you bought the house for 700 grand. So now you have the house at 800 grand. No, 700, 10%, 770, almost 800. Let's just say 800, right? You paying down the mortgage over the course of 10 years. That's one. Two, you have something tangible. And three, that could generate income for you longer term. Because remember, the question was, you don't own property. You don't have anything. That's your first dip into getting into something of an investment, so to speak. The reason I would choose the property is because it serves two purposes. One is accommodation. So you have a place to put your head. That's one. Two, you're paying down the mortgage. So it's kind of like one might say you're giving the money away, or you're giving money to the bank, but you're paying it down. So that money tends to come back to you eventually through the increase in the property value. So that's why, to me, I would recommend owning property, because at least you have a roof over your head, which is the main thing. Secondly, your property increases in value over the course of time. And since you're not looking to use that money, I would recommend that person invest in real estate, because you can also get rental income from it.
So it's funny you say that. Statistically, they say they own the property you live in. That's not your investment. Because if you think about it, it's like, let's say you open up a company and you have no income, but you draw a salary. You're eating your own hand.
Yeah,
So
but
usually-
I sorry to cut you short.
Mm-hmm.
Let me push back a little bit to that sentiment. Is, if you're a smart investor, yes, I agree with that statistic where it's not really an investment if you live in it.
That's right.
However, if you purchase that property to rent,
Mm-hmm.
as an example,
Yeah.
or it's one of those things where you can have a tenant in the basement or somebody living there, that becomes a residual income.
You're right. But I'm just going by your initial statement.
Fair enough.
Just keeping it real.
Oh,
You said you have a roof over your head,
Dude.
so that implies that
okay,
you're
fair
living
enough.
there.
Yes,
right?
yes. I take
So
that
you're
back.
you're not totally wrong. And if you do that, and you do, yes, I said do. If you do that,
Oh man.
then you kind of broach that gray area of, okay, this is owner occupied, but then you are making money off of it because you have a stream of income that is not yours. So other tenants are giving you stuff. I think the challenge though is that, number one, not a lot of people do that. And then number two, you also have to put in money because usually the basement's not finished.
Mm-hmm.
That's another upfront cost. And you got to recoup those costs first. And then once you recoup those costs, then you can potentially start putting that back into the mortgage.
Yep.
So you have two things going against you. You have, again, this is assuming the basement's not finished or anything. So you have a house. That house has its own burden of a mortgage. So that's drawing from you, right? From your investment. And then on top of that, you have, let's say you do the basement. Again, sorry. You do the basement. And
Finish the basement.
Thank you. Finish the basement. And then you take another $80,000 loan on top of the line of
Well, these are all hypotheticals too,
loan.
because here's the thing, right?
Can I finish?
My bad.
On top of the mortgage. And so now you have a huge load. Again, I said load. I don't know what's wrong with me today. Pause. A huge situation. A huge situation where you have this debt against your asset that, I hear what you're saying, does go up in value. But the question is, you have the interest bearing that is also going up in value, that's competing and eating into your investment profits in a sense. So with stocks though, stocks are intangible, but then you can diversify and you can kind of hedge where you have your money. So like, let's say for example, you feel like the oil is going to be going sideways. You can find out, okay, what can I park my money in to offset the oil that's going down? And that's something that's very valuable. The last thing I'm going to say, I find, and again, this is just me personally, wherever the masses are, government regulation will control, because they know that at the end of the day, everyone wants to do this. So they're going to protect it and they're going to try to curb craziness that may happen. Stocks, I think, are still relatively low key compared to real estate. And so, yes, it's regulated, but there's so many little things. You heard about the GameStop situation where all those kids or young people just gamed the system and they just did Robinhood and they made lots of money. You can never do that. I mean, yeah, you can do that with the housing, but you would have to do things really illegal. You know, we talked about loopholes and stuff like that, but they were doing it legitimately. And ironically, the government did it illegitimate. They stopped them.
Based on the scenario that I gave, and I know a lot of people are probably watching this as well to make that decision, because some of you might be caught up in that situation where you don't know what to do with the amount of money that you have. These are just our opinions based on what we know and what we trust in. At the end of the day,
speak for yourself.
Yeah, both ideas are good. However, what I'd recommend is speak to a financial expert, because they're going to also engage with you on what we call, what financial experts call know your client. So your risk level. Kevin has given his reasons as to why stock is good. Some people will buy stocks and the moment the market falls, they just panic and start selling. And, you know, so these are some of the things. And some people will buy real estate and they just don't know what they're getting themselves into. So that's why you always want to talk to experts to give you that ability to make a coin-sized decision on which route you're going to take. But it's important to invest, and I think that's where we're trying to land on this one.
100%. And again, to echo what you're saying, Jai, it's not either or. You don't have to do one or the other. You can do both. There's so many ways to invest. Stocks is one way, houses another way. You have private equities. You got a million different ways. Well, yeah, you can just do directly gold bullion and things like that. I was going to open up a Chick-fil-A. Chick-fil-A is $10,000 to start up.
No. It's $10,000 to become an agent, not to start up. Yeah, I read it because...
I hear you. So you don't own it.
You never own Chick-fil-A.
You're right.
Yes,
but it's still a $10,000. That's a pretty low barrier.
Yeah.
The other thing, too, is I think they vet you quite a bit.
Yes, they have to select you, and it's like... It's a rigorous process. I looked into it one time, and it's like it's almost like you're writing a medical board exam or something.
Yeah,
the people that they select, but it's that's out there.
But why not? Just think about it.
You're right.
I challenge you. Anyone that's trying to get a mortgage, it's a rectal exam. They ask you for this, 10 years of this, 2 years of this. last 3 months of
Yeah,
this,
that's
it's
true.
just as annoying. It's
Yeah.
just as bad when you're trying to get a line of credit. And heck, try to get equity out of your house. Go ahead,
Good
try to get
luck.
equity out of your house. Good luck with that. They're going to want this, they're going to want that. And they'll only give you 80%. It's ridiculous. You'll never, with the stock, with all other types of diversified investments, you get it all. It's just ridiculous. So remember what I said? Wherever you're at, wherever the masses are, they will control and limit you. And so stocks and other areas like even franchise and stuff like that, they're not as prevalent and they're not as regulated. I think even some governments, or there may be some grants. If you do a certain type of franchise, there's grants that you can get and get awarded, and they may give you some to offset. Last thing, start a business. That's great. You invest in yourself. You can get grants 100% from businesses, especially if you're a minority. There's money out there for minority businesses. I'm going to drop my mic. Last thing, you got to say anything last, or what's up?
No, I said.
You're in awe.
No.
Wow.
I'm just like, just talk to a financial expert. I think the most important thing is just don't think about the future when you have money.
Yeah.
Don't blow it. Don't buy Gucci shoes and all that. Just think about your future. I think that's one key thing, because we don't talk a lot about money in our community
Yeah.
and how to make that money work for you in the long run and to have generational wealth. So it's important that you look at it that way and ensure that you secure your, not just your future, but the generations to come.
So sorry, insurance policies. I got to say, insurance
Yeah,
policies, participating fund insurance policies, dividend interest bearing policies, 20 pay policies. You pay it for 20 years and then for the rest of your life it pays out. Do it really young. Do it for your kids, do it for your grandkids. Just set up policies when they're really, really young. It's cheap, and then at the end of the day, you pay for 20 years, and then that's it. It pays itself in dividends. These are amazing policies. They weren't available when our parents were around. Take advantage of these things. All right, guys. Once again, Nerdy Monday. Hope y'all found it interesting, and please subscribe. It's been a pleasure. Have a good one. Peace.
Bye, guys.
God bless.
Yeah, I like the idea of gold. Well, I like the idea of diversifying, because that's what I did for my son.
Mm.
I'm gonna do for the second one coming is just I put $10,000 in gold when he was born, and I think as the last time I checked, it was probably somewhere between 40 to 50K. I'm talking about like solid, not
like
not gold
on a
stocks.
stock.
Yeah,
Okay.
no, I bought a mint. Like I went to a bank and so things like that. These are little tricks and pieces here and there.